Okay, peeps, welcome back. So today we're going to be talking about the dollar index or the ticker symbol DXY versus Bitcoin, its inverse correlation, and what it means for crypto in general. Let's get it. So, the first thing that I want to bring up is that this video is going to be a combination of macroeconomics, technical analysis, and cryptocurrency. So, just understand that it is a little complicated, but these inverse pairs do help substantially and understand where the market's going, so to speak. This is more of like a reversal play. So, basically, what I mean by that is um, so let's say hypothetically we're looking for the price of Bitcoin to stop dumping and go up. Basically, what would we want to see here on the charts? Pretty much we want to see the dollar index collapse, and from that point it's a pretty good indication that a reversal in Bitcoin would be coming and we'd be moving up to the upside, as you guys can see on the charts. So we're going to go over the dollar index first. Okay, so what is the dollar index and how does it work? Well, basically the dollar index by itself doesn't really do much of anything. It's pretty much just the US dollar. That's all it is. As you guys know, the US dollar is the primary world reserve currency. There's 7 currencies in total, I believe. It may have changed since then. I'm not sure. That's something I have not actually kept up with. But again, we do a lot of stuff here at this channel, so we can't be doing all things all at once. We're just people. We're not God. We can't do everything. So, anyways, so with that being said, the dollar index is just by itself, it's basically the US dollar. It's fiat currency. It doesn't really do much of anything. But when we give it in a correlation relationship, so to speak, with risk on assets, it starts to paint a different picture. So, what are considered to be risk on assets? Basically, anything that an investor is willing to invest in when the Fed is printing money is considered to be a risk on asset. And the opposite is true. When the Fed is not printing money, when they're raising rates and tightening the economy and they're rolling assets off their balance sheet, risk on assets are considered to be much more risky, and most investors will not put their money into these risk on assets, or basically they'll sell off their positions and sit on cash and get paid 5% interest on their cash while the Fed's or treasury bonds while they're raising rates and trying to fight inflation. So how the US dollar works by itself, it just kind of goes up and down. You can trade it on futures. There is a futures US dollar version that can be traded. If we go down here, down our watch list, you guys can see that we have an entirely separate category for futures. This is futures only. So we have pretty much everything. We got oil, the indices, precious metals, and you guys can see that we have some foreign exchange contracts here. So we have the yen, we have the Canadian dollar, and we have the Euro USD futures pair. But we don't actually have the US dollar here, but there is a US dollar futures contract. For those of you that ever want to get into trading futures, that's an option if you guys are not interested in the inverse correlation. But when we pair the US dollar with stocks and or crypto, I can tell you guys right now, generally how this goes is when the dollar goes up, usually the dollar only ever goes up when the Fed is raising rates and there's a possibility of going into a recession. They're rolling assets off their balance sheet. They're tightening the economy. Unemployment could potentially be going up. That obviously none of that's a guarantee, but that's generally what happens when the dollar goes up. Okay, and when the dollar goes down, that means that the Fed's cutting rates. The Fed is printing money. They're adding assets to their balance sheet, and so on, so on. So you guys can see the correlation that it would have between basically the Fed, macroeconomics, and the risk on assets here. So how does it work with stocks and crypto? Well, generally speaking, when the dollar index goes up, risk on assets go down. And when the dollar goes down, risk on assets go up. Now, we're just going to do this as a correlation between Bitcoin today. We're not going to do stocks. We'll do that in a separate video. I actually got to remember to jot that down so I don't forget. So anyways, so we're going to get into technicals right now on this. So as you guys can see here on the MACD, we are about to have a death cross. We did have a weekly close below these lows here. This is typically a very bearish signal. So if I was to trade this, if I was actually trading the US dollar, I'm going to show you guys exactly how I would do it right here. So pretty much, and I don't trade the weekly, just so y'all know, but if I was going to trade the weekly, this is exactly how I would do it. So pretty much we're looking for, well, actually, let's move this up a little bit. So this would be the resistance zone. This is what I would be looking at in terms of, where I would potentially want to get in as close to selling the top there as possible. But of course, I want to see a confirmation below the EMAs. We get the confirmation below the EMAs here. I would basically short right here, put my stop above this candle up here, or wait for it to get back to the EMAs, short at the EMAs, and put my stop above the previous candle high. And then I would short this thing straight into support is exactly what I would do. And I'd put my profit target somewhere down in the support range. But the reason that this is bearish, and I'll show you guys right now. So basically you have this red candle close here, which is called a red, or basically a bearish engulfing candle. If it closes below any of these candles here, that's a bearish engulfing candle, okay? So we have an equal close here on the green candle. It closes up, but only about 50% of the way through that candle. And then we have another massive red candle that closes below these two. That is a bearish signal right there. What does this mean? Well, basically this means the US dollar could go down as low as, I would say, $1 even from this high up here of 107. That's what we're looking at. The EMAs having a death cross would obviously help push this thing lower. And you guys can see that we pretty much got rejected off of overbought territory on the RSI and also on the MACD. We're pretty close to basically having a triple death cross going on here between the indicators. So the US dollar, as you guys can see, has been going up basically since June of 2021. We've been on this crazy parabolic run. For those of you guys that traded the dollar, I mean, man, you guys are making a killing. Good job. So, but as you guys can see, it topped out here at 115. We did think that it was going to top out somewhere between 115 to 120. This was a couple of years ago, by the way, so we did not actually suspect that we were going to be that accurate, but we were. Reason being is because, well, I mean, we'd have to go pretty far back in history, but we can actually show you guys here right now what we're talking about. So basically, we kind of expected that pretty much, as you guys can see here, this is a peak of 120, and then you kind of have like this, you see this peak all the way back here of roughly about 112, and you got like some wicks right here at 115. That's kind of why we suspected it would top out at 115 to 120. We thought 120 would be the max, but turns out it was actually 115. So we're going to go back to the weekly here. Basically, the general idea here between the dollar and Bitcoin is when the dollar goes up, Bitcoin goes down, and crypto goes down with Bitcoin, because as you know, crypto is the king crypto, or Bitcoin is the king crypto, and when Bitcoin goes up, altcoins go up, including Ethereum, and when Bitcoin goes down, well, altcoins go down harder. That's the way it works. So, but when the dollar goes up, Bitcoin goes down. When the dollar goes down, Bitcoin goes up. We're going to show you that right now. So let's take a look at the macro weekly multi-year time frame here so you guys can see what I'm talking about. So we'll start with the peak here of basically the dollars. So you guys can see that the peak of the dollar here was at 115 in September 2022. If we go over here to September 2022, you guys can see that the low of Bitcoin was roughly about, looks like roughly about 17,900. It wasn't the exact bottom. The exact bottom was at 15K or so, 15, 16K. But you can kind of see in this general area, Bitcoin was bottoming out and it was getting ready to reverse. So we didn't actually see a massive pop in Bitcoin until we got this this dollar index moving down. So the exact bottom on Bitcoin right here was this big fat red candle on the DXY. And then as the dollar went down, we started to move up in Bitcoin. Dollar is basically consolidating, and as it's doing so, Bitcoin continues to go up. So we'll go back to the next major swing low here on the DXY. Excuse me. So as you guys can see here, the DXY did have a double bottom. This first bottom here, you guys can see that Bitcoin basically had a huge pullback. We're actually going to measure that right now. So the pullback from the top to the bottom was roughly about I'd say about 33%. It was a pretty large pullback, to be honest, as the dollar was moving up. Um, Bitcoin was moving up, but again, this was, Bitcoin was basically going up from the dollar coming all the way down here. So on the second bottom here, you guys can see that this was roughly around the same time frame that the Bitcoin price had this massive capitulation, which I can tell you guys right now is about 50%. And as the dollar started moving up, we kind of had this weird thing where Bitcoin basically had a second peak. Even I was surprised by this. We did make some money during that run up, but we got in a little bit late. We weren't paying as close attention to the charts because we had a lot of other stuff going on. And unfortunately, we didn't get into like October, but we did manage to make some money. So, but it wasn't until the dollar started really taking off here after this peak in the dollar and we had this huge bounce that Bitcoin actually started capitulating. Now, this is a combination of things. So basically, the dollar going up and the Fed coming out and saying, hey, we're going to raise rates going into 2022, roughly around this time frame, which you can see in November 2021 was when the Fed said they were going to raise rates. Basically, the dollar going up and the Fed saying they were going to raise rates in combination pretty much tanked the price of Bitcoin. So that's what you're looking at for that one. Now we'll go even further back here on the DXY. So we got this peak here. As you can see, the dollar really topped out here. And what do we see on the left? We see that that's the pandemic lows on Bitcoin. And once the dollar started capitulating, as you guys can see, Bitcoin did an insane rally here, pretty much all the way to the top to right around the time that the dollar was nearly bottomed out. If we measure that, we'll go ahead and measure this now. You're talking about a 1,400% return on Bitcoin. That's a big return. That's roughly about a 15x, I believe. So we have, I got to zoom out a little further here. So we have this bottom. Yeah, so we'll go with this bottom right here on the DXY. As you guys can see, the DXY was getting ready to plummet right here back in February 2018. The Bitcoin top pretty much happened right before the bottom of the DXY, so it's not a perfect correlation, but it's pretty close. And as the DXY went up, you guys can see that Bitcoin basically fell off a cliff pretty much. Now, was it perfect? No. So the DXY was going up and Bitcoin was going up. But then, of course, we had this peak here on the pandemic lows, and then the dollar went down and Bitcoin had its true parabolic bull run. So we'll do one more here just to kind of really give you guys the scratch on this thing. So I got to actually zoom in on the Bitcoin chart here. It's a little difficult to do with just two charts, but as you guys can see, this is kind of the Bitcoin bottom here. So you got all these peaks you can see on the right on the DXY. Bitcoin starting to move up as the dollar is getting ready to peak. And this was the 2017 bull run, by the way. And as soon as the dollar peaks here, you guys can see that Bitcoin just absolutely ripped straight up to the moon. So how far did this thing go up? Well, it pretty much did, I think, like roughly about 100x, I would say. It's actually pretty hard to measure. So we're just going to say it was at $500 a token. The low on Bitcoin back then was about 200. So this was still about a 40x, which is huge. I mean, if you get that in altcoins these days, that's considered to be a pretty good return in altcoins. So what is the summary of all this? Well, the reason that I'm bringing this up now, guys, instead of at a later point in time is quite simple. If the dollar index really truly is getting ready to collapse and the Fed's getting ready to cut rates, which is most likely what's going to happen when the Fed does cut rates, the dollar is going to collapse because, again, people are going to be moving their money out of the dollar. Understand the psychology of this, okay? The psychology of behind why people trade or invest along with macroeconomics is the most important piece in investing. I'm just telling you guys that from, our nearly 8 years of experience doing this, okay? This is what we've learned. It's not financial advice, but this is what we consider to be the most important things. So if the dollar is truly going to collapse, it would line up perfectly with the Bitcoin halving, which is In April of next year, a lot of market analysts estimate that the Fed is going to start cutting rates between somewhere in March to June of next year. That's what they think. If that does actually happen, the dollar will collapse and Bitcoin will rip up to the moon if the inverse correlation between Bitcoin and the dollar remains true. As you guys can see so far, based on the dollar Bitcoin inverse correlation here, it has been pretty accurate. So, dollar fell off a cliff. Bitcoin bottomed out. Dollar's been going sideways, not really going up, not really going down. And Bitcoin's been going up as a result of that. So far, the correlation between the two has remained true. And if the Fed cuts rates between March and June of next year, the dollar collapses. Could there potentially be a stock market crash? Sure. We don't think that's going to happen. Reason being is because last year the market dumped while the Fed was raising rates. That doesn't usually happen. Usually, when the Fed raises rates, the markets go up, they don't go down. So we think the opposite is going to happen this time, where the Fed will cut rates next year and the markets will go up instead of going down. Because basically, with the bear market last year, it's just our opinion, of course, but we think that the markets pretty much have already priced in the Fed rate cuts as of last year. And that's the reason why we're seeing a rip to the moon this year, even though the Fed was still technically raising rates and or holding. So we'll just have to wait and see. That's kind of our thesis on what we think is going to happen. But again, if the dollar collapses and the Fed cuts rates and what we believe to be true comes true, that the markets are going to rip instead of dump, which is typically not what happens historically. But crazier things have happened in the last 3 years, right? Then at that point, Bitcoin will start to moonshot at or after the time of the halving, or perhaps even before, based on the spot Bitcoin ETFs. And then there it is. Money will flow out of the dollar back into risk on assets, and people will be investing their cash they have sitting on the sidelines in Bitcoin and crypto and stocks, and risk on assets will moon. So anyways, this is our video between the US dollar and the Bitcoin. This is the inverse correlation. Hope you all enjoyed this content. If you guys have any questions, leave them in the comments below. Please like, comment, and subscribe, and we'll see y'all later. Peace.